Good evening, all. Ira Epstein with your SPDR ETF wrap-up, and this wrap-up is for the evening of Thursday, the 8th of September, football night, 2022. I want to start off by offering my condolences to all of the UK on the passing of a great queen, 70-year monarch, the longest in history of the UK, and a great lady. What can we say? Prince Charles will become King Charles officially now, as though the ascension happens tomorrow, so be ready for that. All right, there'll be more, and that's 10 days of what it is. In the marketplace, you had events today. You had the European Central Bank announcement, and Ms. Lagarde was definitively in the hawkish camp. She did the 75 basis point hike. The market was torn between 50 and 75, and she said more hikes are coming. Okay. Second part happened. Fed Chair Powell spoke at a virtual conference today. And if you watched it, he was definitively hawkish. And you had started out higher in the stock indices. You nosedove. You came back. You had 200-point moves all over the board today. I mean, it was rock and roll time. But at the end of the day, the market, I think, made a decision. And so far, I'm in the camp that the market said, the impact of Jackson Hole's speech by Fed Chair Powell is over, and it showed in markets today that lost their way on the downside. Many of them are now neutralized, and we'll see that when we go into the charts in a minute here. What is the market focusing on now then? Tuesday, this coming Tuesday, CPI. Now, the headline number is liable to be, it was 8.5 last time. 7.5 wouldn't surprise me. We're seeing energy prices. They're over here, actually. I'm so used to the futures board. They came down. They're down rather sharp in different parts of it. Food prices, to a degree, down. So people will get enamored with that. But that's for the sucker people. The people that understand what the Fed looks at knows that they look at core inflation, which is the same number stripped out of energy and food. That is not going to do what the headline number did. I'm not saying it can't fall. It's a much stickier number. And that's what the Fed realizes. They haven't seen the number either, but I'll be surprised if it's down sharply. Okay, so let's go to the charts and let the chart action tell us what we've got. Even Shop was an interesting one, which is Shopify. Market's been falling down, as you can see. And all of a sudden, today's high, which is 3203, takes out 3199. So for the very first time here, what the market successfully did is it broke the pattern from back here of lower highs, lower lows by getting up and over this high. And now you have no trend. What you have is a higher high, lower low. So that part of the trade is gone. As the market rallies, if it can continue, it's got layers of resistance all above it. And on this pattern, there's nothing that can make it tomorrow go from a bear market to a bull. It went from bear to neutral. The Bollinger Band was not hit on this break. When it hit it here and pros took the money off the table, that turned out to be one of the better places. And what did you do today? You lost the embedded reading. Why? Anytime you get back and you get that market to turn back from both the K and the D line, the red and the blue, being underneath for several days or more, that 20 level, that's the time to come out. The odds strongly favor that price and the 18-day average are now going to make a run at each other before something else happens. That's what I'm expecting. AMC is not even budging. Now, my fear in this market always is what level can you get a brief rally off of the Reddit type trader or the meme traders? They can come out of left field. You've just been drifting here sideways. But as long as you have the embedded reading, you're not going to scare me out of being overall bearish. I probably should drop this and not follow it for a bit. It's just gone sideways, and I'm of the opinion I can do you better by looking at other things. In Apple, you've got the lower highs, lower lows, and as I suspected and said, look for support at the 100-day average of closes. The combination of that and Bollinger Bands under it are good. However, you still have the bearish embedded reading, which means rallies are likely getting capped by short sellers stepping in or longs that are frustrated with this decline. let's face it, the new phone that came out, now that I've read everything about it, I don't know that I want it. It's got a faster chip and a better camera. Okay, what does that do for me? So I've got to make up my mind. Do I want to go out and blow them, near $1,000 on it? I don't know. I may not do it. I was hoping for more, to be honest. In Disney, we have an oversold market that's drifting to lower prices. If it wants to culminate with climatic action to the downside, 106.80 to 107.16. You get the message that if you take out 113.89, you break the pattern of lower highs, lower lows. That's how I'd read it. Get over that. I don't think I want to be in that any longer. XLF today, big day for XLF. Here is a market that coming into today, you had a reading of 2054, you were embedded. And what did the market do with that? Today, the market continued on, got to be out of shorts. You've broken the pattern in the chart. You no longer have lower highs, lower lows, and momentum's been lost, and the likelihood is very strong. Price in the 18-day average will hit tomorrow. I had tried the short side on that in recommendations. Didn't work, must tell you that. Not every trade works. Was it a big loss? No, very minor. XLI, what happened today on the close? You just follow me right here. Let me get you back one more time. There we go. Okay, this is where you were Wednesday. Both numbers were still embedded. If you get reading over 21 in the red, what do? You got to be out of the market. You got a 24 number. Goodbye. I know you haven't broken the pattern of lower high and lower, have you? You have not. 94.11 was today's high, 94.22. It doesn't matter. You'd have to re-embed tomorrow, and more times than not, by a lot, you don't re-embed. So odds favor more of a short covering rally, and this leg, as I'll call it, from the Jackson Hole has come to an end. Same thing went on in the semiconductors. XSD, no. Now you got a 24 reading. You didn't have that. You were sitting here, as you can see, embedded. You lose it. Now, here's what I want you to watch. Does this give you an edge before prices get up to those averages? Keep your eye. The first one is obviously the green, the 100, and then after that, the 18. Often the 18 is hit, but it doesn't have to be. It's the closest of the main moving averages. XHB, you lost the embedded reading, and you closed over it. I think it's the 18 that's in play now. Now you would say, home builders, why are they rallying? Because of just what I said. I think this is an event where the market grew weary of the Jackson Hole event. Do you know what 30-year mortgages went up to today because they got reset today? 5.89%. You're telling me you should rally home builders on that? It's more technical in nature. That's what I'm trying to say. We then get over to XLE. This is still coming down, still in a bear phase, but it has stalled itself out just where we spoke this whole week at the 100-day average. Resistance is the 18. There's no edge in going short because you're too oversold in the market, and there's no reason to be long. In GLD, well, you lost the embedded reading. Now, you stay with me here. This is very important. Here is the market yesterday. You had a 23.96 reading. You see that? Today, you backed off. I still contend you'll see that 18-day average hit before you take out that low. That's my guess in the marketplace. And that's because typically that's what occurs when you lose the embedded reading. You lost that same thing in GDX, 18-day average target. You lost it today in copper, probably going back to the 18-day average. None of these are bullish. They're out of bear phases. Could copper get bullish? Well, close over 30.63 could certainly set that up. Let's see if it can do it. You're sitting here. You need to go another 41 cents higher. In TLT, I'm still bearish, looking for the lower Bollinger Band again. Still fully embedded, looking that way. UUP coming out, as I said the other day, and I mentioned that I thought the pros would get out, was just time. You've gone up there and you've wasted too much time not getting to that Bollinger Band. And that's what basically happened. And today you lose the embedded reading. I'm looking for more of a correction in the market. And FXE never did embed. It's just getting a bounce. Remember, 40% of the dollar index weighting is it takes place with what market? The euro. So you put it all together. This is the game plan that I'm seeing, and we'll see where it goes. Interesting, that Twitter gained nicely today. Tesla gained at the same time. $7 million paid by Twitter to the whistleblower in June. How does that weigh in this case? The market knew that. You're still up 65 cents, so we'll see what is there. You know, we have an awful lot of free information at any point. If you want to learn more, go to our website, www.iraepstein.com. You'll see the free offers, education, the different courses that I have, everything through there. I'm Ira. You have a great day. I don't have much to do tomorrow from the looks of things, the way I'm talking tonight, and I'll see you over the weekend. Take care.